So today is Tuesday, March the 17th. Happy St. Patrick's Day. Probably doesn't matter where you're living, you're probably not going out and celebrating St. Patrick's Day. So let's take a look at the markets. Volume, we've come to expect extraordinary volume, and that's what we had again today. Everything was green, but this doesn't tell the whole story. Advancers and decliners were only 2 to 1. Not exactly what we were looking for. Let's look at the timeline. We saw the market drop from the open because overnight it dropped from that crazy day we had yesterday. Then it started to move up, lost some momentum, started to move up, lost some momentum. So this is just a sign of wandering, of meandering, of the market not really knowing what to do and letting the algorithms take charge. We see everything is mainly green, but the real picture is quite a bit different. And for that, we bring up the ES futures, and we can see that let's just look from the morning. We hit the Globex low at 9:30 in the morning. So our Globex low was formed at 5:35 in the morning, and we hit the Globex low at the open, and then started to move up, matched our Globex high, which was formed at 4:15 in the morning, went up to, and this is important, the 1.382% Fibonacci of the prior day, of the current day's move, came down to the 0.382 of the prior day's move, moved back up over the Globex high, came down, ended up over the Globex high, but after the market closed, we dropped. So if you looked at your gains at 4 o'clock and you looked at your gains at 5:30, they were quite a bit different. We're heading now down towards the Globex low, and of course that will create tomorrow's Globex low or Globex high. Let's take a look at the stock market breadth. The momentum went up a little bit as the market went up a little bit, but that's not what we're looking at anymore, because this is a short-term or medium-term indicator, and we're looking more for a long-term indicator, and that's our summation index, which now stands at minus 253. So whatever it was yesterday, we added 238 to that, and we've gone further down, and look where we are. We are getting close to the low that we had in December of 2018. But that's not what we're looking for, because we saw that low here, and was exceeded a little bit here. But we are probably going down to test the late 2008 summation lows before we're going to get the bounce. So let's take a look now at the charts and see where that might be. First of all, let's look at the VIX. The volatility index, let's look at where it is in terms of historical numbers. Let's go look at a weekly, and we can see that historically we're almost at the point now of where we were in the worst of times, November of 2008. So the volatility index is up that high. That's a good sign. If you look at the stochastic momentum indicators, you've got the short term is already overbought, and you've got the long term, which is getting pretty close to that. So we are reaching a place where we'll have a bottom. It doesn't mean it's the definitive bottom and it's the only bottom. It means that it's going to be one of several bottoms before we catch a bounce. The SPX was down. Let's get the SPX in here. We're looking at the weekly here. We're looking at the weekly for support areas. We said this was a support area because of this area here and because of where we closed on December the 12th. But we could just as well bring that down to here. It's not as neat, but we did hit that green line today. I honestly think we are going down to 21.27 before we catch a bounce. So there's going to be more bad news to come, regardless of how many trillions they try to inject into the economy. It's not going to make up for all of the unemployment and the missed rental payments and the money that's not spent at restaurants and bars and in buying new cars. It's a tremendous blow to the economy. So if we look at Apple, which had a range today of $19, only to end up at 252, so a little bit below the 200 extended moving day average. So that's pretty important. Now we're looking at a weekly chart, and we're looking at the 200-day moving average for 1 day. And we touched that, and we pulled back, and we ended up just below the 50. So that still shows some bullish strength for Apple. But if we look at these stochastic momentum indicators on a weekly basis, it shows that the SMI 40 still has some ways to go to be oversold. On a daily basis, we're oversold, but on a weekly basis, not so much. So that builds into our theory of we're nearing a short-term bottom, but it's not going to be the only bottom. There's going to be several more before we get the bounce. Caterpillar ended up slightly. Its momentum indicators are right at the bottom as oversold. Is it time to buy? No, because look at Caterpillar's stochastic momentum indicator, the 40 on the weekly. It's still got more to go. So Caterpillar is going to become a better buy. Coca-Cola is one that I've been looking at because it's been a steady dividend payer. And if you look at it this week, it looks like a real success story. Let's look at it on the daily. Again, 2 days in a row where the stock is up, and it's definitely oversold on the daily basis, but on the weekly basis, not so much. It shows that the stochastic 40 still has room to drop. Home Depot is a place that I bought 50 shares today, and I don't often buy 50 shares. I usually buy in blocks of 100, but it was nice to nibble in on it because its dividend is just under 4%. And that's a stock that's going to rebound big time. Maybe, not as good as Apple, but certainly better than a lot of others. It took the 38.2% Fibonacci retrace on this move from the January 2009 low. So that was as low as it was after the 2009 economic crisis, and it's come down and it's bounced off that Fibonacci number of 159.58. 38.2%. So it was worth nibbling in a little bit. And I wouldn't buy more tomorrow, Wednesday. I might wait till Thursday. And if we're still moving up for Thursday, take another 50. But take it slowly. AT&T was up a little bit. Now we're looking at bigger than a 6% dividend. And we had this alert here set at 31.52, which it hit, which is a previous support area. And we came back and we touched that support area and we moved above it. So that's important. Let's put a little flag here and let's look at AT&T there tomorrow. Whirlpool up 458. This is the weekly. Let's look at the daily. The daily shows up. The weekly shows that we did get support right at this area where we expected, where you had a high in 2006, a touch in 2006, another one in 2008, 2011, and here we are where we got support and we bounced off it. So let's take a look at that one. I still believe we can go further, and if you look at other areas of support, you might look at this one right here, where you can see that it was an area of resistance, 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 support, and support. $54.71. You're looking at a stock that once was trading for $216. I remember owning Home Depot at $57 and regretting having sold it. This is an opportunity to buy it back again at $57. and recreate the opportunity you had back in 2011. Those are the only ones I'm going to cover today. Just take a quick look here. There's nothing else. I mean, Tesla. We haven't looked at Tesla in a while, but look at Tesla. It's getting its due because it's been a shaky stock all along. But now we've had 1, 2, 3, 4 weeks of very steep drops, which really looks like the S&P drop. And you can see that both the short term and the long term stochastics still show an opportunity to move down. So that's where we are today. The things we're going to look for tomorrow with the VIX being as high as it is, the S&P making a touch off of this support level. We may see a bounce tomorrow, but I think it will be short-lived like it was today. We had great overnight, and then we lost it. And I think that same can happen tomorrow. We may open tomorrow flat. We may move up a little bit. It will suck some buyers in, and then the algos are going to take it down. Look for us to move to 2131 as our next area of support. And after that, frankly, we'd have to be looking at 1829, which isn't an area we've seen since 2016.